information so you can anticipate in advance what the market's going to do, so you know what stocks to buy, you know what stocks to short. It's all about having good information and anticipation. You got to anticipate. The one thing you can't do is rely on your brokers. Listen.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What are you, nuts? Partners or shareholders? You're not included.
Check out the free 10-day trial and follow Phil to investing success. Learn more at philsgang.com. philsgang.com. When making wise investment decisions, Phil Grande has some sound reasons you should join Phil's gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com.
What if you could have an in-depth understanding of the stock market just like the pros? Well, thanks to Phil Grande and philsgang.com, you can. philsgang.com offers comprehensive, up-to-date market information designed to help you understand and anticipate market behavior. With philsgang.com, you'll build your investing confidence even through down cycles and periods of uncertainty. Go to philsgang.com. philsgang.com today. 877-600-GANG. 877-600-4264.
There's a lot of noise out there in the financial world. Bank failures, interest rates, bonds versus stocks. It's a lot. That's why it's important to find a voice of reason that can guide you through these volatile times. Phil Grande and philsgang.com is where you can find honest, helpful guidance to successful investing.
Get the knowledge and understand how the market really works.
And for a limited time, you can join Phil's Gang free for 10 days.
philsgang.com. That's philsgang.com.
Are you a stock market investor without all the information?
What are you, nuts? Market's going up, market's going down. We're getting all this bad information.
How do you invest intelligently? Phil Grande can show you.
If you want real information and you really want to know what the market's going to do and you want the truth, go to my site, philsgang.com, and also listen to me on my radio show every weekday at 3 o'clock Eastern.
Phil's got the answers at philsgang.com.
That's philsgang.com, where you get the truth and you get the information you need about the market.
When the stock market is volatile, how do you invest intelligently?
Hi, I'm Phil Grande at philsgang.com. There's no need for you to be panicking in a market that goes up 800 points one day, 700 points, then it goes down again. All you need is good advice, need good direction. You don't get that from your CNBC and the Fox business and all these crazy shows. You don't. Here's what you get from them. Thank you, Jim Cramer. But this is something that this really bugs me. Listen to this.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What? Their responsibility is to their partners and shareholders and not to you? Check my site out, philsgang.com.
When the stock market is up one day and down the next, you need the experience of Phil Grande at philsgang.com.
What a difference it makes in your financial life. philsgang.com. It works.
I've been a Phil's Gang member since 2014. Over that time, I've generated over six-figure profits. Following Phil, his charting system has really been a huge impact on my career and my life. I would recommend Phil's Gang to the mom and pop out there. I would recommend it to parents teaching their children. I would recommend it to grandparents. If you really trust in their system, you will do well.
For more information, go to philsgang.com or give us a call at 877-600-4264.
When you listen to the advice of Phil Grande at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up, or why there's continued inflation, or why the bank rates are going up. So you understand, especially yields. The most important thing is to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And good afternoon and welcome to my podcast and radio show. My name is Phil Grande, philsgang.com. I've been doing this for over 50 years, so we know what we're doing, and we're going to share some of that knowledge with you today. Do you recall when I said this, when everybody was all excited about the deal with China, with one hung low? Here's what I said about it. There is no deal with China. What they're not telling you, it's a letter of intent. Those are useless, especially with China. They never keep their word. So this big deal with China, there's no deal. You watch, it will fall apart. And today, what happened? And I remember I said that. I said it over and over. I dealt with China. I was in the oil business. I dealt with. They're the worst to deal with. They're terrible to deal with. They never keep their word. You can have a meeting at 9 o'clock in the morning and you say, okay, we're going to regroup at 3 in the afternoon to finish the deal. We go back in at 3 in the afternoon. It's like there was no 9 o'clock meeting. And so that's why I laughed like hell when they kept saying, oh, we got this great deal and the market was rallying. Oh, really? Wow, look, they put a deal together with China. Wow, this stuff is working. No, it's not working. And here's what happened today.
President Trump makes fresh comments. Of course, Sarah mentioned it this morning, reportedly on stalled talks with China, arguing the country has, quote, totally violated its agreement with the U.S.
Oh, gee, think so? Think they would do something like that? Unbelievable. This whole thing is getting to be unbelievable with these tariffs. It really is. But what I want to talk about today, which I think is really important, is that, you know, all we keep talking about is the Magnificent Seven, the Magnificent Seven. And there has been, since 2009, just too much concentration. Or let's put it this way, there's too much dependency on these 7 stocks. It's getting out of hand. 7 out of 500. In fact, if you've been in these stocks for quite a long time, my suggestion would be to start selling into them. Start taking your profits. Now, let's think about this. The S&P has gone up 800% since 2009, and we've been sold a bunch of crap that is because of how strong earnings are. It's all about earnings and business investment and increased productivity, and none of that is true. It's all crap. None of that's true. It's all because of increase of money, okay? And they think about it. They printed over $20 trillion, and they shoved that money. It's called increased money supply, and they shoved that money into the banks, and the banks then allowed you to go borrow money. Everybody go borrow money, get more and more into debt, and then they also, the banks took that money and they gave it to corporations, public companies, at low, low rates so they could buy their own shares. So, but the point is this, that if you look at the Magnificent Seven, then yes, they rallied 800%. Great. And again, remember, 2009 to 2025, there's only a handful of stocks that drove the S&P. And that's what people don't understand. And as I said, the concentration is very, very dangerous. For every, think about this, for every $100 invested in the S&P 500, about $30 goes to these 7 stocks. That's double what it was just 10 years ago. And the magnificent stocks, remember, account for more than half of the S&P 500 gains in 2023 and in 2024. Half, more than half. And again, it's just, they make up 33% of the S&P 500 market cap. That's significant. Think about it. 7 stocks make up 33% of the S&P 500 stocks market cap. That's insane. That is nuts. The returns from 2015 to 2024, 697%. And just in the last year, 2023 to 2024, 80% in returns. So the bottom line, the Magnificent Seven stocks outperformed the S&P 500 stocks by 697%. Let me repeat. These 7 stocks, 7, outperformed the S&P 500 or 490, 93 stocks by 697%. So this is just supposed to go on forever? It's dangerous. It's getting dangerous now. So this whole market for almost 15 years has been based on printing money, and what they call QE. So they could go and they could buy bonds, the Federal Reserve buy bonds, and drive the bond yields down. So the Federal Reserve, to match, the Fed always drops theirs first, right, the short-term yield. So let's say they dropped it down from 4% down to near 0. Well, they got to get the 10-year Treasury down, but they don't control the 10-year. So what they do is they print money. The Treasury does, gives them the money. They give it to the 5 biggest banks, and they go and they start, the 5 biggest banks go buy all these Treasuries to drop their long-term yield down, like the 10-year, to come in close to the Fed rate. So this whole thing has been one big game. And so if you think about it right now, the S&P, the PE ratios for the past 25 years, okay, has been averaging 21, PE ratio of 21. That's 21 times its 12-month forward earnings. It's now, today, 30 times its forward earnings. And you got these tourists in there buying these stocks like crazy. The big institutions aren't buying these stocks anymore. They sent out a notice about 4 weeks ago saying they're cutting way back on the tech stocks because they're just way overvalued. The valuations are insane. So all of these facts, okay, that I'm just giving you, these tourist investors are just too dependent on these 7 stocks. That's all they buy. And if it wasn't for the tourist investor, we would have no rally. Now think about this. And I had the numbers here. I hope I have them today. I had them. Let's see if I got them today here. I'll find them for you. The amount of stocks, let's see, the amount of, if I can find the crashes we had here. Okay, so think about it. In 2009, we dropped 50%. The market went down 50%, right? In 2000, and then it rallied, but it couldn't hold its rally. It couldn't hold it. and then it dropped down another 20%. And then they came in and zero interest rates, and all the corporations bought their own stock back and pushed the market up again. The market went up in 2018, it went down 20%, then they pushed it right back up again. So think about it this way. 2009, the market went down 50%. But then they pushed it back up by 2018, 358%. Why? Because of all these zero rates, and everybody's buying the same 7 stocks. And then in 2018, it couldn't hold. Think, it went up 358%, but it couldn't hold. So after going up 358%, it dropped another 20%. That's called the bear market. Dropped 20%. So what they do? Print more money and buy more of the same 7 stocks. So 2018, after it went up 358%, it drops 20%. So they print all this money and go buy the same stocks again. And so from 2018 down 20%, by 2020 it's back up 35%. So you think, oh, that's good. But no, it didn't hold. It didn't hold at 35%. After it dropped 20%, it went up 35%. It couldn't hold 35%. It dropped again. In 2020, we had another crash, 35%. So they printed more money. Everybody bought the Magnificent 7 stocks, and that's 2020 now. And then by 2022, they drove the market up 120%. Now you would think, well, this will hold. This one will hold. No, it didn't. So the rally in 2022 that went up 120% didn't hold. That went down again. That went down another 25%. So think about it. 2009, we're down 50%. Rally. Then we dropped again 20%, 2018. Rally. Dropped again 35%, 2020. Rally. Dropped again 2022. Another 25%. This is insane what's going on. So the way they're driving these rallies is increased money supply and low rates, and then you got these dumb tourists in here buying all these stocks, and they're buying the same stocks, these tech stocks. Now, obviously, these tech stocks have been driving the whole market. Look, we're in the tech stocks. I'm not saying don't buy them. What I'm saying is just be aware that this is not going to be good. You can't run a stock market. You cannot run a stock market for 15 years on 7 stocks. On 7 stocks. And then print all this money to give to the corporations to buy their own shares. They don't do anything. There's no increased productivity. There's no new machinery. There's no business investment. At some point, this is all caught up, and it's caught up now. And that's why Trump said, we got to do some tariffs here. We need to do some tariffs. But the tariffs aren't working because we have too much inflation. The tariffs are not going to work because tariffs makes everything too expensive. Now, Trump, with all the problems he has with his tariffs now, remember, he hasn't got any deals. The deal he bragged about in England, there's no deal there. It's another letter of intent. So the poor guy sitting there, nothing's working. And he's hoping that Powell will cut rates, but Powell can't cut rates. Every time he cut rates to zero interest, he didn't have the debt. He didn't have the deficits. He didn't have the inflation. And tariffs, you can't cut rates when you do tariffs because tariffs are all inflation. Everything goes up in price. So Trump all week has been asking for tax cuts. All week he's been threatening him. I'm going to get you fired. I'm going to do this. You got to give me a tax cut. No, he's not going to give him a tax cut. Now, I don't know. He may give in. He maybe likes his job and his perks to the job. He may just give in. But these interest rates, remember, were last time they lowered the interest rate was in 2024 by a quarter point. So the average 30-year mortgage rate right now is 7%. 7%. The average mortgage rate. So Trump is trying to make the case, look, we haven't lowered our rates since December 2024. The mortgage rates are killing us. It's killing the housing market, for God's sakes. You got to lower these rates. And Trump's been arguing all week the 30-year fixed rate mortgage is too high. And the average credit card interest rates, okay, are insane. I mean, they're at 28%. They're at 28%. When Trump left office, they were at 14.6%. Now they're 28%. So he's telling Powell this week, you can't give me mortgage rates at 7%, you can't give me credit card rates at 28%, and here I'm doing tariffs that make everything more expensive. We're going to have the biggest crash in history. You got to do something for me. That's what's going on, but nobody's explaining this. Nobody's explaining it. So there's terrible inflation. Okay, it's significant, in fact, because they lie about what the inflation rate really is. And so right now, the S&P is in big trouble. How are they going to sustain it? They haven't sustained any rally. So don't anyone give me the argument. Yeah, but look at all the other rallies.
Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When making wise investment decisions, Phil Grande has some sound reasons you should join Phil's gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, okay, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com.
Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
Hey, welcome back to Phil's Gang. Join my gang. It's free for 7 days. And I'm telling you, 10 days. Sorry about that. Free for 10 days. And you can learn how to sell short as well as go long. If you don't know how to sell short, it's nearly impossible to make money in the stock market. That's why 90% of people, 85 to 90%, don't make money. Check it out. In the last 50 years, 80 to 90% of people in the stock market do not make money. Why? Because number one is they only buy stocks. Do you realize to try to make money just buying stocks, how good you have to be? You got to be trading to perfection. You know how good you have to be to just buy stocks and try to make money? Remember, that's like driving a car with no reverse. No reverse. How well you think you would do with your car? They give you a brand new car and you're driving around, but there's no reverse. How long you think you'd go without getting in an accident. It's the same thing with the stock market. You're going to get into an accident. You got to learn how to sell short. And the other thing is you got to stay with the same 6 stocks. There's no such thing as a hot stock. That's all BS from Kramer and the rest of them. There's no such thing as a hot stock. This company's going to do this, this company's going to do that. Who cares? You follow the money, you follow the pricing. That's what you follow, not the BS. You follow the money. And once you learn how to follow the money, and when money goes in, stocks go up. Now, let me show you something. They're trying to push one more rally. And they know they can push this rally because they know they can push the 7 stocks because we got a bunch of morons, okay, called tourist investors. And who are tourist investors? These are people who refuse to learn. They don't ever want to learn. They're crazy people. They're like gamblers. All they do is hear a hot stock on TV, and they go buy it. I mean, it's terrible. And that's why you see a lot of times that the big market makers try to push them out of the market. And as the market's going up, and also you see the market come down, 8-10%, tries to scare them out, get rid of them because they muck the market up. But let me show you why we're going to go for a rally before this market finally has a 50% or bigger crash. Because they're doing the same thing again. Look on this chart. This is the money chart right here, okay? This is M2 money supply. Look at the money they started to put in since 2008. In 2008, there was about $8 trillion. Today, they have put in from $8 trillion, now there's almost, from $8 trillion to $22 trillion. That's what drove the market, not earnings, not productivity, not all this crap you listen to, okay? Listen to this here, listen to this. This is unbelievable. So we got, let's see, which one should I do first? Let's do, let's try that one first.
While a lot of people are calling a top, I actually think that this is more of a, mid-cycle kind of start of a new bull market.
Oh, tell the truth. Stop being a coward. Tell the truth. Tell them what they're going to do is increase the money supply, you coward. Tell the truth. That's all they're going to do is they're going to print more money, increase the money supply. Why? What do they need to do? They need to get the consumer confidence up to get the stock market up, to sell Nike sneakers. Do you know, people have no idea how important consumer confidence is. Consumer confidence, there will be no sale of Nike sneakers unless there's consumer confidence. How do they get the confidence? They keep making sure you get into more debt, more debt, more debt. Treasury prints money, they put the money into the banks, and then they take that money and they loan it out and keep loaning it, and you got interest rates on credit cards, 22, 23%. They don't care. They'll give you another credit card. 28%. They'll give you another credit card. And this gets the consumer confidence up. As long as the consumer can go into the bank and borrow 2, 3, 4, 5 credit cards, he's happy. So and what's going to happen, you're going to get the same tourist investors buying the same 7 stocks. The same 7 stocks. But it's getting harder now because the tariffs have mucked everything up. When you start with these tariffs, man, that's bad news because tariffs just make everything screwed up because it makes everything so expensive. That's a problem with tariffs. So again, remember, this market, he's right. They're going to push another rally. That's what they're going to do. That's why Trump's in here begging for a rate cut. So don't think this market's going to crash right now. Oh, we're going to have a crash. It's going to be a doozy, probably 50, 60%. But they're going to try to delay it as much as they can. And so eventually I got to believe that Powell will give in and cut rates for Trump. Now listen to this here. Come on.
And then our debt, which you...
This is Jamie Dimon.
And then our debt, which you just heard a bunch of folks talk about eloquently, it's large. And it's not just us. We added $10 trillion in 5 years. We have, you had Reagan up there talking about deficits. The debt to GDP was 35%, and the deficit was 3.5%. Today, it's 100% debt to GDP net, and a deficit of almost 7%, highest peacetime ever. And when the CBO does their numbers, which I don't really trust, by the way, they they should do the stress test. Like what happens if we go into a recession? That 7% will be 10%. And so we have problems, and we got to deal with them. And
what do? Take the 7 stocks and keep rallying them. And how do they do that? Money. Remember, they increase the money supply to get consumers' confidence up, so consumers will go and start buying stuff, more credit cards, and then they take the same 7 stocks, and the tourist investors don't know what the hell they're doing. They're going to go and keep buying the same stocks over and over and over again, the same 7 stocks.
The government spends like a drunken sailor, and someone else said, no, a drunken sailor spends his own money.
Reagan said that. You're copying Reagan. So what we got right now is a situation here. Look here in this chart. Look at the money they pumped in since 2008. They haven't stopped pumping the money in. And the higher interest rates go, the more money they're putting in. The more debt we have, the more money they put in. The more deficits we have, the more money they put in. They do just the opposite because they're politicians. They're politicians. And believe me, these tariffs are a horrible thing. I mean, look at Moody's reduced our credit rating, for God's sakes, okay? And we got a terrible labor market. It's very weak. They lie every day, tell us how strong it is. It's not. We get these fake job numbers all the time. So all you can do to keep making money is like we tell our members, follow our portfolio. We have a portfolio of 6 stocks, and we have one, we have the S&P. Okay, we have the S&P. So we tell our members, our students, follow us on the 6 stocks. We tell them when to buy, when to sell, when to add, when not to add, when to run like hell, and how to sell short. If they stay with that, our portfolio, follow our portfolio for a full year, at the end of the year, they will have made money. In the first quarter, when the market was down, okay, 7%, the market was down 7%. We were up 5%. We were up 5%. So, I'm sorry, the opposite. We were up 7%. They were down 5%, and they were negative 5%. The S&P negative 5%. We were up 7% in the first quarter. Why? Because we keep the same stocks, and when you keep the same stocks, you wait for the buy signals come to you. But what they've educated you is to watch these stupid TV shows, you know, on Fox and CNBC, and follow all these experts. Here comes Joe Suckface. Yeah, he manages $500 gazillion. Who cares? Who cares? And nobody cares about what companies do. That's gone. Once they started to take and outsource everything, nobody cares about what a company does anymore. It's all about money. Where's the money going? And you got to follow the money. And that's why we designed our own charts 25 years ago. And they got to be good charts. Over 225,000 people have been using them over the 25 years, okay? Because you follow the money. But let's get back to what I was talking about here. So Trump's trying to make an argument to please cut rates. And because we got to get mortgage rates down. We got to get the mortgage business going. But again, the big problem right now is that we're always buying the same stocks, and that's what is getting so dangerous. Okay, I mean, yes, I mean it looks great, right? You say, boy, these stocks keep going up all the time, right? They keep going up. I mean, look at it, these 7 stocks make up 33% of the S&P market cap. That's nuts. And from 2015 to 2024, our return was 697%, which means that the 7 stocks outperformed the S&P 500 by 697%. The S&P, the PE ratio, average, 21%, a PE of 21. That's 21 times times 12-month forward earnings for all these years. Now it's over 30. And then you got all these same stocks. Take Tesla, Nvidia, Google, Meta, Amazon, Apple, Microsoft. They lost more than $1.5 trillion off their combined valuation since the start of 2025. But these tourists still go in and jump in and buy them. They go in and buy them. I mean, there's no question. The Magnificent Seven makes up a huge part of our S&P valuation, significant part. And that's why they go buy. But you're going to get caught one day because everybody's buying the same stocks, 7 stocks. Nobody cares about the other 494 stocks. Nobody cares about those. Doesn't mean anything. For example, 2015 to 2014, we achieved a 697% return. 697% return. This is crazy. In the last 5 years, it grew another 46%. Talk about the Magnificent Seven. So there's just, you can't keep going like this. It just doesn't work that way. And as I said, the tariffs are really getting, the tariffs are a horrible thing because what's causing our dollar to be weak is if Powell cuts Fed rates again, our dollar gets weaker. Tariffs make our dollar, you can't have a weak dollar and have a stock market that holds the rally. I just went over the beginning of this radio show. I just went over every time we rally, it can't hold. So if he goes and he cuts again, and that's why you got to learn how to sell short, because all these people who thought they were making money every time, right? The market would go up 20%, then it dropped, then it go up 30%, then it dropped, then it go up 40%, then it dropped. They always give their money back. They never make money. 80 to 96% of people don't make money. But when the market goes down 50%, then they rally it up 150%. Then when it goes back down again, why don't you want to make money going down? Instead, they tell you, cost average down, cost average down. Tell them to go to hell, cost average down. They should be in jail, anybody tells you that. I mean, just think about how silly that is. You're going to buy a stock that's getting worse and worse. You're going to keep adding to it. I mean, this is insane. I mean, this is just nuts. So the big thing is we need to get the foreigners back over here to buy. But they're not going to buy our stocks. Remember, they buy 48% of our stocks. But they stop because they don't have a strong dollar. They got a weak dollar. Why? Because all those cuts from all these years, there's zero rates and all the Fed cuts. Now the tariffs, it could be worse timing to do tariffs. This could be the worst time to do a tariff because tariff is going to weaken the dollar. Rate cuts weaken the dollar. Look at the Treasury yields, weaken the dollar. The Fed rates weaken the dollar. I mean, the valuation of the dollar is tied to interest and inflation. So, again, if you want to make money in this business, we've been doing this for 50 years, go to philsgang.com, sign up, we'll teach you free for 10 days. Don't only just buy stocks, learn how to sell short with our color-coded chart. All right, I hope you enjoyed this. Tell everybody else about this program, and I'll see you on the chart.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.